Hi everyone and welcome back to the channel. So in this video, I'm just going to be going over my goals for investing in 2024. So 2023 was a pretty good year. We managed to basically accomplish everything I wanted. Just to remind you guys, so I wanted to buy 4 shares of TELUS every single month for the entire year, and I ended the year with 89 shares of TELUS. So that's why for 2024, I have a goal to get to 100 shares of TELUS, since I'm already so close to that goal, and it's a nice little milestone to achieve for this particular holding. My next goal for 2024 is to build out my CP Rail, EQ Bank, and Dollarama position to 5% allocations. Now, these are all new positions that I've added very recently, as I think their valuations are pretty attractive, especially in the rising market that we've been having pretty much all of 2023. But it does seem to be kind of tapering off a little bit, but in general, it's a little bit harder to find value in the market. So buying these new positions, which I think are very high quality companies that compound very well. I'll just touch on to Dollarama, since that's the newest addition to my portfolio. They pretty much have I'd say pretty tight stranglehold on the dollar store market in Canada. So basically 3 out of 4 dollar stores are owned by Dollarama in Canada, and they also have some in Latin America as well. So they are growing globally, and they have a lot of built-in advantages over their competitors since they have so many more locations. Just the fact that they can just simply get things far cheaper, and they can order things in much more massive quantities than their competitors combined. And in general, it's pretty fragmented outside of Dollarama. You have a couple of companies fighting over the last 25% of the market share, so Dollarama can basically just use their size to squeeze max profits. They can drive down costs much more aggressively than the other dollar stores can, and still maintain pretty good profitability. They pay a very small dividend, but they grow very aggressively. And those are the types of companies that I really want in my portfolio going forward in 2024. And my third and final goal is to hit $15 per year in annual dividend income. So I did a calculation. I'm currently getting $1,360 per year in dividends, and I should be able to hit way over $1,500 per year in dividend income. But I don't want to force myself to pick stocks that just pay a high dividend and ignore long-term growth, because I think that the 3 above stocks in my second goal are going to perform really well, give me a good combination of a little bit of a dividend growth, and of course the stock price appreciation as the businesses increase their top and bottom line revenues over time consistently. And if you never want to miss one of my updates or any of my stock reviews, please like and subscribe to the channel so you never miss any one of my updates. So our portfolio value is at 31,712. I have an RRSP, which is just invested in 3 holdings. They're just American stocks, so I get to keep all of my dividends from my American holdings rather than paying a 15% withholding tax if I were to have them in a non-registered or tax-free savings account. And then I'll be going over an update in my TFSA. All I did in my RRSP was just reinvest my dividend from Vici Properties. So that's my casino real estate company, and I bought basically 20% of a share, just reinvesting dividends from that position. So that's the only change I've made in my RRSP. And let's get into the TFSA. And the TFSA is at 29,863. So we're up 145 in the last week. Past month we're up 2%. Past 3 months we're up 10%. Over the last year we're up 13%. All time we're up 9%. So a lot of stocks have been recovering. I was down on a lot of these pretty heavily, but they have recovered quite nicely. So Apple, just doing fine. It was in the 190 range. It did drop a little bit. Analysts are worried about its growth in the near term, but I'm not too concerned about them long term, so that's why Apple continues to be a hold. If it dropped substantially more from these levels, then I would be very interested in adding to my Apple position. I haven't added to it ever since its kind of grown out of the 140, 150 range. But if it goes down there again, I'd be more than glad to continue adding to it. ATD doing fantastic. It's been a great performer ever since it's been in the portfolio, up 30%. The big turnaround story since the last update would be Aritzia. They had a great earnings, and the market has completely changed their perception on it. It's basically grown maybe by 30% in 2 days since the earnings, and the standout from the last earnings report was that Aritzia reduced their inventory levels by 20%. So that is restoring some confidence that Aritzia is getting back on the right track, and some of their capex is declining in terms of warehousing their excessive inventory, and they had like temporary warehousing, but now they have their own distribution center, so that should be improving over time. They just built one in Ontario, and I think they're going to be building one in the United States as well. So they're going to have their own distribution centers, which should help with their margins going forward over time with their inventory. And another thing from the latest earnings call was that they had their best Black Friday ever in the company's history. So the sales are going very well, and they had a positive outlook for the following year that they were projected to grow. So overall, the market is extremely happy with this stock, and we could be seeing it return back to the $40 range, or maybe even beyond. The all-time high was in the mid-50s. But overall, the one thing I really want to, I did buy one share of this at $25, and that's grown to $34. So that was a pretty good buy. I only bought a few shares. Wish I bought more, but again, I wanted to see the earnings report and kind of see where the company was at and if it was going to be meeting my goals or not. Just because if they continue to disappoint and I see long-term problems with the earnings, then I might have to reconsider my position in it. But, I felt like most of the issues were temporary. And I'm just going to quote Peter Lynch, that the most important thing in investing is not getting scared out of the stocks that you own. So the stock price going down in a holding is not going to bother me. I was down, really, really big on this, maybe 30, 40%. But it never really worried me. So I'm just going to continue holding on to this and just seeing where the growth lies ahead. If it does become overvalued, then I might have to reconsider the position. But right now, I just think it's a hold. Maybe I'll add here and there if the entire market runs up and this one kind of goes into a little bit of a dip or kind of just stays where it is. We are finally back slightly in the green on this one, so not doing too bad. Brookfield is recovering quite well because the market is anticipating a lot of rate cuts this year. We're going to see if that happens fairly soon. If it doesn't happen in the first quarter, then probably by the second, but the Canadian Bank of Canada is not really as optimistic sounding as the Federal Reserve in the United States, but we'll see how that goes. We can't predict interest rates. I couldn't predict how they were last year. I'm not going to pretend to know what they're going to do this year. And with Scotiabank, I purchased 8% of a share, so just a little bit of a fractional buy here with just some leftover dividends. They were about this range. I do like the fact that their CEO is going to be focusing on earnings per share growth and profitability. So I'm liking what I'm hearing from the new CEO. We're going to see if he's going to execute that plan, and a little bit of less focus in the Latin Americas and more focus on the US and Canada for their future growth prospects. We have CNR doing quite well. The railroads are both doing well, CNR and CP. Costco is doing excellent. They recently paid out a $15 special dividend to people, so that's really nice to see that when they have just too much money that they really can't reinvest while they just give it to the shareholders. So I really like their shareholder focus overall, just increasing shareholder return, getting money back to our pockets to investors. And then with Dollarama, we purchased 3 shares of this company. I'll be doing a little bit of a deeper dive into this company in an upcoming video, so please do be subscribed so you don't miss that one. I'll be going over their monopolistic dollar store empire that they have in Canada, and they are growing worldwide as well, in regions outside of Canada as well. For ENS, I purchased 6 more shares as the a lot of the stocks on the TSX have been rising immensely, and ENS has not really caught up. This is basically just a very income-focused version of a way to invest in Enbridge, and I'm going to continue to average down in this position as long as it presents a discount to me, because this gives me a ton of cash flow that I can put right back into ENS or into other opportunities that I catch in the market. With EQB, I just purchased another share of this, going to 3 shares, and it's been doing quite well. We're up over 9% on the position. Very fast growing bank in Canada, and they're projected to grow much faster than all of the other Canadian banks for 2024. And they're pretty fairly valued relative to the other big banks, which are expected to decline or kind of stay flat for 2024. And we're going to see how those interest rates affect those big banks. And the main thing affecting the big banks are going to be the loan loss provisions. So as soon as we see that the banks start lowering those, we can start having a bit more optimism, and the banks will return to probably their all-time highs, and the very high dividend yields are going to start disappearing, especially if they cut rates, because bonds will start paying a lot less, and that's going to push dividend stocks up a lot. We have ETHY, which is my Ethereum ETF, is going up a little bit. Just a lot of excitement over crypto. They recently announced several Bitcoin ETFs were approved for trading on the market, so it's giving some investors a bit of hope into crypto, and there's just a lot of positive momentum of crypto right now. With Granite, it's slightly in the green, so I'm not really buying this one right now. I think there are better deals in the market, but it's still pretty inexpensive, and if they do cut interest rates, it could definitely grow. There are some other positions that I do want to grow, namely being CP, EQB, and Dollarama, which are all low-paying dividend stocks with a lot of growth ahead of them. So I just want to inject some of that into my portfolio. I don't want to be too focused on generating a very high income, because I could be missing out on long-term returns, since I do have a long runway of 20-30 years to invest. And then with Intel, this one is back in the green. It's been in the green for a while, so we'll see if they can keep that momentum with their positive earnings as of late, because the market is seeming to really love it. Microsoft is my best performing stock by far. It is up 42%, and it's doing fantastic. We'll see how it does in 2024. The valuation, it does seem a little expensive right now, so not adding to Microsoft. But same thing with Apple. If there's a meaningful drop, or people lose faith in tech, or there's just a huge market crash, I have to consider dropping more money into this company because of the quality and the long-term runway they have with AI and cloud computing, and just their gaming division, since they just acquired Activision Blizzard recently. So a lot of things are going well for Microsoft. And with Smart Centers, I just purchased one more share, going up to 69 shares. So just one more of those. Just a really, really nice monthly cash flow. This is a way bigger dip than Granite. So just going to keep buying this one. If Granite drops back into the red, I definitely want to get some more of that. So kind of splitting between these two pretty evenly. And then with TELUS, I purchased 4 more shares. One of them was just from the dividend reinvested that I earned from them. They paid me about $32. So I purchased 4 shares, 3 with my own money and 1 with the dividend that they gave me. And we are getting pretty close to 100 shares of this. I'm going to plan to get this up to 100 while it's still in a nice little discount, just because, again, there is definitely a lot less value to be found in the market than there was just, even 6 months to a year ago. But on the other hand, when you do identify stocks that have, a discount, it's a little bit easier to know where to deploy your money, since, the options aren't so plentiful like they were in 2023 when, everything was down. You basically couldn't miss at that point. And if you enjoyed the video, please do leave a like and subscribe to the channel so you never miss one of my updates with my portfolio. And we can definitely learn some things together as I learn them, as I make good calls and bad calls. We can learn from both. And with the dividends earned, I'm up to $21.84 all time. The annual projected dividend income has increased from $13.40.90 to $13.63.32. So nice little increase there. Monthly, we're projected to earn $113.61 versus the previous $111.74. Daily, we are making $3.74 a day, over $3.67, so getting very close to $4 a day in dividends. Once we hit that, I'm going to be pushing for $5, just so you know there's always another goal to achieve and keep myself motivated. And if the portfolio were to work a 40-hour work week for me, it would generate 66 cents per hour over the previous 64 cents. So 2-cent raise, not too bad, especially since we're not doing anything actively for this money. It's just being earned in the background as I live my life, as I work, as I sleep. And year over year for 2023, I earned $1,106.56, which is a nice increase over 2022, which was $743, and a huge difference over 2021, which is only $261.80. And we've so far this month I've earned $71.80, but haven't even earned the majority of my dividends for January. So this will be an all-time high for this month. And this annual dividend number will definitely hit way over 1,400, because not only am I going to get these, but I'm also going to reinvest dividends and, of course, my fresh deposits every single month into dividend-paying stocks will continue growing this number over time, and it's just going to continue snowballing out of control until eventually it should replace all of my income. I just have to keep consistent and continue investing and reinvesting my dividends. All right, everybody, have a great day and have a good one.